this story goes like this, where we actually wanted to understand what is an edge, why are we buying companies, what are the rules of the buying process. So today, this session is not going to be about mind maps. It's not going to be about learning theory. It's more going to be of a practical storytelling session where there'll practically be a monologue, and we will actually decode every aspect of rule following emotionally, right? So now we keep saying rule following, right? What is this rule following all about? Why even rules are created? All that is fine, but today our process is going to be about emotional understanding. So to trigger this emotional understanding, it's very important to now hear this story. Are you guys ready? Please type R if you all are ready. Once we have set the context, yeah, I want each one of you to be ready, focused, fully focused, right? So, friends, you know that there are so many analysts in the country who are doing a lot of research, right? One of those analysts in a technical analysis company, let's call him Mr. Tom. Okay, let's call him Mr. Tom. What happened is that one of the chairmen of his own company, one day he, in olden times there never used to be those technical analysis charts and all, no access to charts and stuff, but still there were many investors who were investing. They used to track prices manually, and used to actually write prices in the diary and stuff like that. So those were the days, all right. And what this chairman of that same company where Tom was working, what he used to do is he used to maintain a diary writing all the prices and stuff like that. But he was really good at his stuff, and he knew investing really well. But he did not understand charts. So he went to one of his best analysts, and he said, can you teach me how charts are? This analyst, Tom, he said, wow, today is my lucky day. I would like definitely want to teach you a technical analysis. So what he did was he tried to teach him basic support resistances. What are these supports? What are these resistances? So he told, like many people trade in the market, right? Like buy low and sell high. Like many people give me this awesome. Whenever I actually pitch my product to them, they start pitching their product to me. They say that, Utkarsh, I have this awesome thing where I have been maintaining so many stocks over the years. And, this is Infosys, this is HDFC, all these stocks are there. And I maintain the range. I buy it at maybe 1,000 and sell it at 1,600. And then I sell it at 1,600, buy it at 1,000. Some people who do derivatives also do this. Derivatives is nothing but future and options, where they buy at 1,000 and they sell it 2,000. Similar thing. So let's understand what are they trying to do. A buyer buys because he thinks the price can go up, right? So I'm buying 1,000, the price can go up tomorrow to 1,600, and I will have the possibility to make money out of this transaction. That is the belief system a buyer has. A seller, why does a seller sell? Because he thinks right now I can sell and then later buy it at a lower price, whether it's future and options or whether it's a regular cash transaction. Each one of us are trying to do this. And there is an interaction between sellers and buyers. So the seller is thinking that I will be buying right now and I'll be tomorrow be able to sell it at a better price. The seller is saying today I will be selling it and tomorrow I'll be buying it at a lower price. Is this understood? Please type in the chat box if this is understood. Yeah? Each one of you, friends. Quickly. Yes. I want a very, very active audience today, because this session is going to be short today. This session is going to be short, but it's going to be profound. Yeah. Something will change today. Something inside you will change today. I guarantee you. But for that, I need each one of you to be with me. Please type with you, WU, in the chat box. Once again, come on. Yeah. All right. Now, friends, so going back to this, our story, right? So this technical analyst, he said that, oh, so what you do is there is this resistance. This resistance is the space where, stock goes and then comes down, goes and then comes down. At every time this hits the price and then comes down. So there is a pattern which is made. So stock always goes here at this point 100 and then comes down. Again 100 comes down, comes down, comes down, comes down. It's doing over and over again. Look at this, sir. I'm telling you. This is how you trade. Next, he showed support level. So this is the support level. Stock goes down every time it hits this and then reverses back. Again goes down, it hits this and then reverses back. Stock goes down, it hits this and again reverses back. So the chairman said, "Wow, this is awesome! Like, so you are able to put this in a chart." He was obviously very quick to understand what's going on, right? So he quickly grasped this. Now, later that day, the stock, the analyst said, "Now look, this stock is falling." This stock is falling and going to touch the support level. This is the support level, right? It comes here. So now at this point, the chairman asked this guy, "So you think now that the stock price will reverse, right? That is what you said. So at the support level, the stock price will reverse." He said, "Yes, sir, that should happen." Now, what did this guy do? He said, "Bullshit." These were his words. Bullshit. He picked up the phone. You see the phone here? He picked up the phone. He called his broker. Do one thing, sell 10 million shares of this particular stock and sell it right now. All the shares. So 10 million shares right now. And you know what happened? What did you think must have happened? So this was the share price. It came here, hit the support level, and now the chairman, yes, actually put the trade, selling trade. So now it went below the support level. In fact, much below the support level. Maybe even by 5%. And the analyst was shocked. What did you do? He said nothing. I showed you what can happen. Can anybody tell me the moral of the story? Can anybody tell me the moral of the story? Let me see how many of you are thinking, how many of you are hearing. Motaji is saying you're not, you can't predict. Okay. Sumit is saying technical analysis is not always correct. Okay. One cannot predict. Nothing is guaranteed. Supply more than hence price down. Right. Nothing is holy grail. All right. So the moral of the story is that anything can happen. So, Sumit, I would like to discuss a little bit more on what you said. Technical analysis is not always correct. Is fundamental analysis always correct? Please type in the chat box. Aren't technical analysis and fundamental analysis just tools? Is anything sacrosanct? Now, friends, we go to this next level where we say that we have an edge. And what is an edge? Edge is our filtration method, filtration technology. We say that technical analysis, this is the support and this is the resistance. Once it hits the support, it will go up. Once it hits the resistance, this will go down. This is your edge. You have tracked prices for many, many years. This is your edge. You have the P expansion formula. You know the variables, known variables. This happens. Then, so for example, EPS increases, margins expand, backward forward integrations, uh, product mix improvements, capex, brownfield expansions happen, low TAM, more demand, tailwinds, industry tailwinds happen. All these, my friends, are your edges and are the known variables. You know them. These are the known variables. But there are unknown variables in the market. What are these? Maybe till now, maybe FII goes away. Maybe DIs come in. Maybe all of a sudden there are more participants which come into the market. Maybe there are more participants which come into your particular stock. Maybe promoter tries to exit. Unknown variables. I'm talking about unknown variables. How many of you can think about some unknown variables? Please type in the chat box. I would like to know some unknown variables. So Utkarsh Bhadauria decides that he needs money for a car, exits. Some people, the economy is not doing well, and sudden government policy changes. Yes. Now the thing is, can be geopolitical risks? Absolutely. Now the thing is, can we accept emotionally? So there is one piece of the puzzle, which is the variables, which is the known variables. The other piece of the puzzle is the unknown variables. Do you today agree that you cannot by any chance predict the unknown variables at all given points? If that is true, if you cannot predict the unknown variables, can you really predict what's going to happen? So, can we today safely say anything can happen? I want each one of you to type in the chat box anything can happen. Do you emotionally understand this? However, I am sure you're writing this. You're writing this in the chat box, but do you really accept this? So, Alok ji, yesterday in the Diamond group, you've asked me this awesome question, right? That Utkarsh, the stock is going low. Stocks are going low. Why are we not buying? What is happening? We, if we buy right now, we are not following our own rules. And the question you will ask, why follow rules? Let's look at the casino. Now, many of you are saying anything can happen, but do you accept this emotionally or you are just saying it? Some of you will not be able to accept this emotionally, let me tell you today. And my job is to convince you today. You, so many of you would be writing anything can happen, but don't really emotionally accept it, right? That is what we are talking about. Let's take casino, for example. A casinos actually, uh, I want to know from you. Casinos are huge in US, in Macau. Casinos are large corporate organizations. Agreed or not? Type A in the chat box if all of you agree. Large corporate organizations, large, very large, right? Now, these large corporate organizations run a gambling business, which, do you agree? Like, as per our discussion today, there are known variables, there are unknown variables. So, known variables is the edge the casino has. He, suppose, what is the edge of the casino? It's rules, right? So, this much it will play, it's algorithms which it has devised over the years. And that is the rule. That is, those are the known variables, right? So that has already been set up in the systems. Those are the known variables. What are the unknown variables for a casino? Unknown variables for the casino may be that maybe someone decides to suddenly exit out of the casino, like play the last one and then suddenly win and then exit. Unknown variables may also be something like, somebody deciding to, got drunk and suddenly deciding to put all his money in that one next bet. Unknown. What else are the unknown variables for a casino? What can you think of? Like, what can happen which maybe the casino hasn't planned? Maybe, in that machine which flows, like some people actually, I think it's called roulette, right? So there is this manual roulette as well. So in that you have to kind of do like this, and then if you actually rotate it with full force, boom, and then it moves really fast, and then it really depends on what kind of strength the other person has. So these are the unknown variables. There are too many unknown variables. Now, I want to ask both of you, in stock markets and in casino, aren't the unknown variables just too much to gauge? Like, how many people will come in? How many people will you watch? How many people we will control? No, 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 don't push it too hard. It will break and stuff like that. How many people are you going to control? Everyone is acting out of his belief systems. Everyone is acting out of his experience in life. So you cannot control that particular part. So casino also has known variables and unknown variables. Now, in regard to casino, it has two rules. One, find the edge. Second one, play more number. So, and at a particular person related or a game related aspect, it can have predictability that I will win or I will lose. But overall, it does not have predictability about its winnings with every player on every game. Do you agree with me? So, what does it do? What does it do? It goes and ensures that one, they have an edge. Number two, they play so more the number of playings which are happening, more are their chances of winning. because there is a natural edge which they have. If they follow their rules, if there is a normal distribution at a distribution level, statistical level, wins and losses are going to be there. But with the natural edge, for maybe 4.5% they will be able to make. Now, I will want to ask you, many of you are thinking, what is this 4.5%? What will happen if 4.5% a casino makes? Friends, I have 1 lakh rupees. And that 1 lakh rupees may be getting rotated every hour. Do you agree? 1 lakh rupees is getting rotated every hour. So first hour, 1 lakh rupees played. Second hour, 1 lakh rupee played. Same money is being used, right? Imagine a 4.5% somebody is making in a week, in a month. So this is very small. But imagine you get funding. You have $100 million. And out of that $100 million, you make a 4.5 million. Now, my question to you, large multi-billion-dollar organizations, are they going to run with an unpredictability? Are they not answerable to their shareholders, their stakeholders? How are they able to work around with a random business of gambling? It's random. But what they do is consistency. Most traders in the market are not consistent. Number one, they don't have rules. They don't have that edge, right? They don't have the PE expansion strategy which we have. They do not follow rules which we have. That's our natural edge. So in our case, the PE expansion strategy is our edge. All we have to do is follow our rules so that nothing drastic happens. And over a period of time, you win some, you lose some. As the casino plays more and more trades, so I'm not asking you to overtrade, don't get me wrong. What I'm saying is over a period of time, when you follow your rules, you I enter at the right time, you exit at the right time, you follow your rules, and you add on to your existing stocks, what is going to happen? What's going to happen is that you will suddenly find yourself being consistent. And once you are consistent with something, you will keep repeating the same thing over and over again without any emotional triggers. You have an edge. And for that unknown variables, to cater to the unknown variables, you follow your rules. That, my friend, brings consistency. How is it that in stock market, some people, some analysts call themselves predictable, like, I know that this stock will go up. I know this stock will be future multi-bagger. I know it. So, in investing, there are people who are saying, I know this stock will be a future multi-bagger. So they're predicting. But how is it that an organization which is not predicting, like the casino, is making more money than these market analysts? So this guy said, I know. And this guy say, I don't know. Let me assess with rules. So it's crazy, right? Crazy, right? Crazy in the chat box. If this is a bulb on, right? BO, bulb on moment for you. If this is the bulb on moment for you. An organization which is completely random is able to make more money than a person who says, I know. So can we now start saying, I don't know? I don't know. Can we now emotionally understand what is it that I know? Utkarsh, I think Shelly engineering will bounce back, it will go up. I want to tell you recently. So Rahul called me. In fact, Rahul, are you there in the call today? Nah, Rahul is not there. It seems. I was. So Rahul messaged me. Right. He said, Utkarsh, it seems Shell Engineering is going to touch its support level. Should we buy it? The question to me, is it breaking out? Rahul, what's happening? Is it breaking out? He said, no, it's not breaking out. It's going to hit the support level. That's why we said it's buying. Let me buy this. Now my question is that, did we not get some negative news regarding that maybe what's I think one of their customers, Dr. Reddy's, had some issues in taking the supply from Shell Engineering. Now, my question is, all that, so many people said it will impact, many people say it will not impact. Many brokers actually released a report saying that nothing is going to happen. It's really good company. And in fact, I remember Mr. Nehal sending a UBS report by Shell Engineering. By Shell Engineering. But what has happened? What has happened is that at a really, really bad shape right now. It's gone down drastically. So my question is, do we not know? Did we not put a PE expansion strategy there? Yes, we did. We do have the triggers, we do have the revenues coming in. But my friends, the problem is that you have an edge. Don't boast about it. Don't get arrogant. You have an edge. Shut up and keep quiet. Shut up and keep quiet. You have an edge. Don't be arrogant about it. I know what you have is really cool. I know revenues are going to increase extrapolatedly into future. I know capex has happened and incremental revenues are going to come. I know product mix has changed and higher margins are coming. But I want you to shut up and not be arrogant about it. Let your stock prove its fundamental and technical strength both to you. Don't invest in the market unless and until that happens. Nothing is sacrosanct in life. Keep room for errors. Let the stock prove its fundamental and technical strength to you. Just give me a moment, yeah. I'll just grab some water. Next, what I want to talk to you about is trends. So, as I said earlier, buyers are buying and sellers are selling. Buyers are buying and sellers are selling. Buyers are buying because right now they think that markets, the current price is good, and I'm expecting a bet to sell this stock at a better price. Sellers are doing that because I'm expecting it to sell right now and then buy it at a lower price tomorrow. Whether it's future and options, whether it's cash, everyone's doing this, right? So we keep repeating this over and over again. Sorry, just a minute. I mean, my throat is a little, yeah, just a minute. Right. So, friends, the problem of trends I want to speak with you starts from minutes, seconds. What are these trends really about? So this is seller and buyer negotiation which is happening. Seller is saying I will buy, buyer is saying I will sell. Now, my question, there are known variables, there are unknown variables. Both are there. Known are the ones which they know every the edge. My question to all of you, are the edges different for each one of them? Please type in the chat box. Are the edges different for each investor in the market? Yes. Are the rules different for each investor in the market? The answer is yes. So the point is, does it not make the market much more complicated than even the casino business? The casino actually has this one natural edge. But in stock markets, there is no one natural edge. Everybody is happening investing in the market with their own edge. Markets are more complicated, even more complicated than the casino. Now, having said that, the trend starts from that moment. Breakout level comes, and that at breakout levels, what is happening is that, oh, stock is just going up. It has already gone up, right? And then you buy. But then what happens? Stock comes down 2% and comes down below your breakout level as well. The answer is that the trend starts from minute level. You must have heard trend is your friend, right? Why do they say that? Trend is your friend. So the trend starts from minute levels, minutes, seconds goes into minutes, goes into hour, goes into days, goes into months, goes into years. Now, question is that is the trend changing? What is this interaction actually telling you? Buyers are buying, sellers are selling, and now they are interacting with each other. You buy, and the stock price comes down below the breakout level. Okay. So, breakout level is actually your known variable, right? But even after the known variables, there are unknown variables which can happen. Exactly that happened. Exactly that happened. Those unknown variables have hit you. You buy, and the stock price goes drastically down. Let's say 3%, 4%. It has come below your breakout levels. in a scenario where buyers and sellers were interacting with each other, buyers buying because he thinks it will go up and I will be able to sell at a higher price. This seller is thinking it will go down and I will be again buying it at a lower price. All these interactions are happening between these two. Negotiation is happening. Some of you have not bothered to attend the bid ask. Like that's one session which I conducted live for the diamond members because I felt bid and ask was very important. Now negotiation is happening between the two parties, or the bid and the ask, the buyers and the sellers. And what happens is price goes down. Negotiations happening, supply, demand, and what happens is the price goes down. The price, my friends, is trying to tell you something. Don't get me wrong. I do agree in fundamental analysis. But what I don't believe is the sacrosanct nature of fundamental analysis and technical analysis that this will happen. Oh, Utkarsh, look, there is a cup and handle. It will go up. This is my target. See, there's a cup and handle, and at 100, there's a cup and a handle. And, I will form a target. 200 is my target. Nonsense. Anything can happen. So, trend moves from seconds to minutes to days to months to year. The thing is that you have to understand when the trend is changing. So, once your stock comes below the breakout levels 1%, 2%, 3%, understand that there is a problem. You're not a fool. But if it goes above your breakout level, there is that support, which is again becoming your known variable. Everything in the market is about probabilities. The problem point is that are you at least getting some probability with on your side? Are you at least having the support level in place? Is the stock has gone 4%, 5% up? Okay. Oh, no, it has gone up. Now I can't buy. It is gone. My chance is gone. Mid cap and small cap, is your chance ever gone with 4 to 5% upside? And now it falls down 4%, exactly reaching at the breakout level. Oh, no, 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 no. The point is now two things you can do at this point in time. You buy, you buy, and your you get into losses on the same day. You decide to come out, hardly any loss, not even like 0.25% loss. You come out, big deal, get lost. I come out. The other thing is you decide that you will let it go to the breakout levels and from there it will bounce. My question is that is anything sacrosanct? But yes, one thing is there, you have your support levels in place, which is your known factor, your known edge. But unknown variables are very different. Now, what you can do is come out really fast exactly on that day itself when things are not looking good, when you bought and it's already gone down. You bought, maybe you even added, it's come down. You got into, like, let's say on a 1 lakh position, you got into 2,000, 3,000 loss already, 2 3% down, which means you can come out, which is coming. Let's say my preferred time would be if I have invested 1 lakh rupees at 1,000 rupees, 1.2 thousand. I think I can come out, right? Nothing lost. Big deal. I will try again. Maybe right now it's not even moving up. But the question is, my friends, you already have your support levels in place. Why do you have to worry? So one way could be I am this person who comes out very, very quickly. I am following that rule. You can follow this rule that let it come. I am a patient guy. Over and above the breakout levels, I'm more patient. So it has gone 2%, 3% up. Once it is not breaking its breakout levels, I will sit silently and this will give me benefit. And till the time you're following your rules, it will give you benefit. Now I'm a very a person which cannot tolerate any losses. Let's say today I bought and I follow just one rule, one thing which I keep implementing over and over again. I say that today I will buy, and if it comes into losses even by 1.25 2.25%, I will sell it. I'm this kind of a guy. So it depends what kind of a guy are you. I'm this kind of a guy who's getting into 0.25 loss. I bought and I'm getting into 0.25% loss. I exit. I'm just saying, I'm not talking about myself or anybody else. I'm just saying I'm this kind of a guy. And guess what? There will be some trades which will come into your this kind of an approach, and some trades will not come into this kind of an approach. Do you agree with me? There will be some trades which you will take above the breakout levels where you will get into profit instantly. There will be some trades where you will, by the end of the day, you will get into 0.25, 1% loss. So I decide that I will only be engaging in companies which do not get me into losses by the end of the day. And I will only write those stocks which are going to be green by the end of the day. Will that work or will that not work? Very interesting question. Have you guys all understood the question first of all? Should I repeat? Piyush is saying not work. What else? What are others thinking right now? Tell me what you're feeling right now. I know you're going through this, right? All the time. You buy above breakout levels and then it's not working out for you. You're getting into loss. Mutaji is saying probably work. What else will not work? What else? I want each one of you to comment here. Just just take a guess. You don't have to be right or wrong. No worry. So let's admit we don't know, right? Right there. What will work, will not work. What do you think? Jagdish is saying will work. And Jagdish is right. Do you know why it will work? Because today I have decided that I will be like this. And I will not let any like I buy over breakout levels, and anything which is getting to a 1% loss, 2% loss also I want to exit. And I am like that. Stocks which actually fall in my purview, in that rule engine of mine, rule which I created, I will get into that. And there will be some stocks which will get into that, maybe lower, but it will get into that. And it might work for people. So as Alok ji is saying, but we were taught to keep a 3 to 5% loss, stop loss. Absolutely. Now, Alok ji, yes, there will be, because we are into mid cap, small cap, the volatility will be much more. Now, this person who keeps this perspective, now don't think about rules. Think from a very, I want you to think from a profound perspective right now. Forget about rules. Now, I want to get into stuff which is forming the rules, the source of the rule creation. Let's address that. You create your own rule and you follow it. There will be some stocks which will fall in your category. You have a natural edge. You create a rule, and there will be some stocks which will fall in your category. There'll be some stocks which will not fall into your category. Do you realize that yes, with a 3 to 5% stop loss, you will be able to have more of those into your kitty, and maybe a person which will have 1% stop loss will be able to have less in his kitty. But the question is, will he be always profitable? Yes, he will be profitable. So he is taking his probability down of success, to be very frank with you. But that is what he is. That is what he is, and he has accepted himself the way he is. My friends, I want to tell you, you have to accept yourself the way you are. If you are a person who cannot take losses, you will have to act a certain way and maybe give up on some of the opportunities. But acting that way with a 1%, 0.5% or loss cutting is also a manner in which you can operate. Check out what is good for you. Act on your own instincts. Make your own rule system. So, Alokji, you said 3 to 5% loss, but I have always said people to find your own stop losses, make your own rule systems. Yes, I have to give it to you because most of you are not following any rule system. Add for buying, for adding, for selling, you need to have your own rule system. Why not? Some stocks will fall in that category. Now, my question is 3 to 5% rule system sacrosanct? Will it give me success all the time? My question to each one of you is 3 to 5% rule system. Stock goes above the breakout level, you buy, and it goes below your breakout levels. It goes 3 to 5% below, and then again comes back. Is that sacrosanct? No. So nothing actually is sacrosanct. It's all about following your own rules. You cannot be cutting your own rules. Whatever it is, you have to keep repeating all the time. And when you play multiple transactions, once you play multiple times with the same rule, whether it's 5%, whether it's 7%, whether it's 12%, whether it's 12%, not don't increase more than 12%, 12%, 7%, 5%, 1%. Anything you do has to be repeated over and over again, and your rules should not be broken. Yes, your decisions may be right or wrong. That is a different story altogether. The outcomes may be right or wrong. That may be a different story altogether. And this is what happens with the casinos. They do lose, right? Do the casinos lose or not? Please type in the chat box. I want each one of you to type. And all the people who are just sitting like this, like as if like I have nothing to do with this sort of. I want to ask each one of you: do they win or not? Yes, they win, and they win because they have a rule system. If you So Piyush is asking, if you cut your loss, say at 1%, and the stock start going up again, and you reinvest. Absolutely, I would reinvest. Why not? And try again. And this time I will try that if it does not go, again I will make sure that it does not go into losses ever. Every time I'm entering, I'm thinking that this is one rule I will follow, and I will keep repeating the same thing again and again. Yes, I will lose something. I will not be able to catch a lot of these things. I have decided one rule for myself. I get into a stock, it comes to a loss, end of story, bye bye, tata, see you. But I decided that I enter a stock, that stock goes up and keeps me into profit, and that is the stock I want to keep, and I want to keep adding, and that is something which I want to do. Friends, also understand one thing: multi baggers are going to be very very few, and the problem is, now I would like to end with this multi bagger theory finally. Yes, so Piyush ji, Hindustan Copper fell and we exited, then it went up. That is something which you are ready to lose. Absolutely. And that is the call you take. You are okay with it. You will lose and you will win some. This does not mean that you will not gain any. Yeah. This is extremely, friends. Let me tell you, I, while I can say that I have made these, whatever I'm teaching you today is something which I have made unobserved. But to be very frank with you, I learned all this when I was a 23-year-old from some of the most profound books. Many books, like they talking about trading psychology. One such awesome book I would like you to also read today is Trading in the Zone. Trading in the Zone. I want each one of you to type in the chat box, Trading in the Zone. So don't take it literally. Like, trading in the zone does not mean trading within a range or something like that. This is from Michael Douglas, if I'm not mistaken. And he's one of the most profound people. In fact, one of our professors, because I did my MBA in capital markets, one of our professors actually gave this book to us in for reading purposes. So it was part of our curriculum. I like to share that with you. And because what's going to happen is you're going to get more insights as you keep internalizing. This thing is not easy, what I'm teaching today. Many people actually feeling that this is something is a repetition. How many of you feeling this is like a repetition? Like we know this, right? Rules, cut our losses on time, enter early, follow our rules. But the question now is that, have you emotionally taken it in? Do you really, really believe in it and then act out of it? Execution is the emergence of emotionally accepting your rules. Execution in the stock market is the byproduct of emotionally accepting your rules. I'll repeat that once again. Execution is the byproduct. So you plan something and you do something else, right? Thoughts, words, and actions don't align. Execution is the byproduct of emotionally executing, accepting, and executing your rules. So my point being, finally, we are talking about multi-baggers. Multi-baggers are the ones which are out of 15 stocks, 4 stocks, 3 stocks will go up. And if you don't catch these multi baggers, then there is going to be a problem. Now, my question to you is that, since you want to keep these multi baggers, so I'll answer some of your questions, Piyush ji and Alok ji. Some of you are discussing today about 5%, 3%. Why I said 3%, 5%? Understand that. You buy at the breakout level. Yeah. So don't get me wrong. I'm not in consonance with always cutting our losses at 1%, right? Or 0.25%. Maybe if given a choice, I would cut it at 0.1, 0.25%. If my allocations are big, I would cut it at 0.25, 0.35%, but not cut it in between somewhere 1%, 2%. Or I will let it go to like 1, 7%, 5%. Either come out early. See, the problem also in markets also happening the same thing. When we come to know that the markets have gone bad, either come out early, be the first person to fear, or be the last person to fear, or do not fear. The problem is that we are being the last person to fear. We let it fall. We don't fear in the beginning. Oh, it'll come up, yeah. Don't. It's fine, yeah. Don't worry. It'll come up. Now it comes down, comes down, comes down. Now the real problem is starting, and now it further comes down, and now at a 20%, 30% now loss. Now you're thinking, oh my god, let's come out, and that is the day to buy. Either act fast or relax. You have to be the person to understand what you want to do. You will have to do some writing for this. Eh, you will have to notice yourself. You will have to do some journaling. I know many of you must be thinking, how many of you are like totally confused today? Whether I want to do a 1%, 5%, 7%. How many of you like me, like totally confused today? Please type in the chat box. Yeah, you are? Yes, yes. More people. Come on, guys, come on. Yes. Let me tell you, you are confused because I want you to be confused. If you're not confused, you'll not ask questions. If you're not confused, you'll not think about it. Ask yourself what you have to do. Whatever you want to do, make a rule and implement like a casino does. It has a natural edge. Second thing, it plays more and more, and out of that this random distribution, it naturally wins. There is an edge. Create that edge for yourself. Create that win rate for yourself. That is going to be awesome. And it does not mean you can think of one person. Either come out early, 1%, 2%, 3%, 5%, 7%, or either let it be. Now the thing is, you can let it be also. Understand one thing. Why are we cutting losses? We are not cutting losses because there is some other problem. The problem is that we have accepted ourselves that we cannot see a loss in 1 year or 2 years. If you can see a 1 year, 2 year loss, then buy and keep it and forget about it. In 10 years' time, you will be rich. I guarantee you that. I guarantee you one thing, that in 10 years' time, you will be rich. But my question is that, can we take 1 year, 2 years of 10, 20% loss? No, if that's not the thing you can do, then you'll have to track, you have to monitor, watch, invest in a small basket and watch that basket carefully. When it comes to multi baggers, my friends, please understand the win ratio is even lower. Lower. Only 3 out of 15 stocks will go up. What happens to the rest of the stocks? You have to come out of them early. Yes, you will say, Utkarsh, what the hell, yeah, you did, you came, made me come out. Yes, I made you come out. But if you get a chance again, if the stocks proves its strength to you, suppose it has broken out and then it comes below your breakout levels and you come out of it, big deal. You come out of it. If the stock is really good, is it going to just go 4 5% and then you say, oh, I've lost everything? But the question is, if you are buying below breakout levels and it is below breakout levels, that is the bigger risk because you do not even have that edge now. That edge of buying above breakout level, you do not have that. Let's say 30% probability, that edge defines everything for you. The 70% is unknown space. The unknown space is already unknown, but that 30% should be there with you, correct or not? Please type in the chat box. Do you think that you should have 30% in your favor or not? Please type in the chat box, because that is giving you that natural edge, the breakout, the momentum, the initial force. If even that is not there with you, then there's a huge problem. So friends, whether you are selecting 1%, 7%, does not matter. My prerogative today is to ask you to repeat it. If you keep repeating it, you will not be in loss. Let me guarantee you that. Number one. Number two, don't let it go below the breakout level. And then, even if it goes below the breakout level, do a stop loss. So you bought it, 1000 is a breakout. You added at 1025. It came back to 975. It came back to 990, let's say. You should be okay with it. There is a stop loss. You have to tolerate losses, because it will not be exactly at the breakout level. Because like that story which we did, somebody may act with his own conscious. He does not know resistance and support levels at all. There are many people in this world which do not understand support and resistance level at all. So maybe we have to account for that. But there is a factor where if it goes now you bought at 1025, it came to 990, now it's going 980, now it's going 975, and you say, I'm okay. That is what kills you. Form your own rules and follow it like a machine. Follow it like a machine is the last words from my side. Thank you so much, friends. I would like each one of you to type in the chat box, form rules and follow them like a machine. And many of you will occasionally boost about this, that I didn't follow some rules and look, that got me here. Right? You will do that. How many of you feel like that, by the way? I know some of you do. I think Omin had once told me. How many of you feel that, in some cases I didn't follow my rules and, it got me here, sort of? Let me tell you, friends, that this is the calamity which is about to happen. You just don't know it yet. You will make this calamity at the wrong time, in the wrong market. It's not about making huge money, it's about survival. If you survive, you will be able to go smoothly and live to fight another day. Stock market is about survival. Cutting your losses is the holy grail. You do not let your stocks come into red, is the holy grail. How to do it? That is the trick. Thank you so much, friends. It's been a real pleasure. We had a shorter session today, 1 hour, 10 minutes. But since it was a monologue from my end, I thought I'll keep it short, and hope there's some deep thinking to be done today. Yeah. Please type deep thinking in the chat box. And thank you so much. Take care. D T, deep thinking. Just like D T. Yes. Yes. Awesome, friends. Thank you so much. Take care. Yeah. Thank you, Mutaji, Ajay, Alok Gupta, Chandrajit, Jagdish, Manan, Mohan, Mutaya, Piyush, Rajiv, Shankar, Sumit. Take care, guys.